OpenAI's financial tightrope. Balancing innovation and investment, OpenAI's financial tightrope. Balancing innovation and investment, Sam Altman, the chief executive of OpenAI, believes that technological revolutions are driven not just by innovation, but by groundbreaking financial models. He argues that new ways of paying for technology are just as crucial as the technology itself. Altman recently pointed out at OpenAI's data center in Abilene, Texas, that while much attention focuses on technological innovation, significant progress often comes from financial innovation. Over the past several years, his company has developed unique and creative approaches to funding the computing power needed for its ambitious AI projects. Many of OpenAI's agreements with chip manufacturers, cloud computing companies, and other entities are unusually circular. The company receives billions from tech firms and then returns those billions to the same companies for computing power and other services. Experts welcome OpenAI's creativity, but also raise concerns about potential financial risks. These unorthodox arrangements could contribute to a financial bubble as OpenAI pursues its highly speculative AI technology. The core deal, a circular financial model. OpenAI's financial structure is built on a unique arrangement where the company receives funding from tech partners and then uses that same capital to purchase services from those same partners. This circular model has enabled massive investments while keeping external financing relatively low. From 2019 through 2023, Microsoft served as OpenAI's primary investor, providing more than $13 billion. In return, OpenAI directed most of these funds back to Microsoft for cloud computing power. This arrangement essentially created a closed financial ecosystem between the two companies. Beyond Microsoft, a web of financial partnerships, CoreWeave and Computing Power. OpenAI expanded its financial model beyond Microsoft by establishing agreements with other providers. In 2023, OpenAI signed 3 deals with CoreWeave, a company building AI-focused data centers. The agreements required OpenAI to pay more than $22 billion for computing power while receiving $350 million in CoreWeave stock. Global investors. OpenAI secured additional funding from diverse sources. SoftBank led a $40 billion investment earlier. This year, the UAE's G42 is building a $20 billion data center complex. NVIDIA announced a $100 billion investment commitment. Oracle agreed to spend $300 billion on new data centers. The stock solution OpenAI has increasingly used stock arrangements to fuel its ambitions. When Oracle agreed to spend $300 billion on data centers, it simultaneously secured payment through OpenAI's use of those facilities. Similarly, OpenAI purchased AMD stock at a nominal price, effectively using equity as both funding and payment. This approach allows OpenAI to deploy massive capital without traditional financing, but it creates complex financial ties that could prove risky if AI development doesn't match projections. The financial tightrope. While OpenAI generates revenue from services like ChatGPT, it continues to operate at a loss. The company's financial model depends on continued expansion of its infrastructure, which requires massive upfront investment. The dual challenge is clear. OpenAI must both deploy enormous capital and ensure that AI development delivers sufficient returns to justify these investments. Failure could threaten not just OpenAI, but its numerous financial partners who have taken on substantial debt to support the AI revolution. Altman acknowledges this risk while maintaining confidence in the long-term potential. The company's ability to navigate this delicate balance will determine whether OpenAI's financial model becomes a blueprint for AI innovation or a cautionary tale of overambition.